Ola Electric has posted their financials for FY22 and things did not go as planned. This data is coming to us from N-Tracker, by the way, and you can see here how their revenue went from 1 crore in FY21, they hadn't even started selling scooters at that point, to 373 crore rupees by FY22 end. They started selling scooters in August of 2021, which was Q2 of FY22. Now, in terms of expenses, those went up from 305 crore rupees to 1,240 crore rupees. So their expenses were more than 3x their revenue, which is why their losses went from 199 crore rupees in FY21 to 784 crore rupees in FY22. Now, what did they spend their money on? Well, again, according to N-Tracker, in FY21, most of their expenses were actually into employee benefits. But then in FY22, as production started to ramp up, the bulk of their expenses went to material costs for manufacturing. But let's put things into perspective here, because Ola Electric does have some pretty big investors who have poured a lot of money into the company, between $800 and $900 million, in fact. And their losses in FY22, if you convert them to US dollars, were just $94 million. However, most of this venture capital is probably more reflective of their spending in FY23 or FY24. FY24, we definitely don't have any numbers, but FY23, the numbers that we have aren't exactly concrete. They're not set in stone yet. Nobody's quite sure what the exact number is, but I'll give you a window into what we think might be going on within the company financially. So Reuters did a report, and according to sources within the company, in FY23, Ola Electric burned $136 million on revenue of $335 million, or 2,700 crore rupees, which is way less than the revenue that they were expecting from that financial year. In June of 2022, which was Q1 of FY23, Ola Electric projected a run rate of $1 billion by the end of 2022. And so if Reuters' source within the company is to be believed, then that means that Ola Electric was only able to achieve about a third of their revenue target, and that was before the FAME 2 subsidies were dropped too. Now, speaking of FAME 2 subsidies, most of the companies in this space had built their businesses with this subsidy in mind, and so by canceling it, the government of India essentially wiped out 900 crore rupees for 7 of the top EV two-wheeler companies in the country. Now, what's interesting here is that even though the FAME 2 subsidy discontinuation was announced in March of 2023, Ola Electric still seems to have some very lofty targets in terms of their 2023 goals. In April of 2023, they set an internal sales target of $1.5 billion, and at the time of filming this video, they have not revised that estimate. All right, next up, UPI is going to be rolling out Pay with Voice at some point in the near future. That's right, move over China, you guys are using Pay with Face? Well, Indians are soon going to be able to use Talk and Pay. So the governor of the RBI is the one who proposed this innovation for UPI just this last week, along with one other new payment method, which will be new to UPI, but has actually been around for a decade now, NFC Tap to Pay via mobile devices. Now, initially, this is only going to be available to Hindi speakers and English speakers, so there won't be any other languages that are supported from day one, but the RBI is soon going to be issuing instructions to the NPCI on how to implement this. And I think what's really cool about this innovation is that it's going to be a heavily AI-based feature, understanding if the speaker's voice is the same as the UPI account holder's voice with 100% accuracy requires a very robust and powerful voice recognition AI. And the thing is too that India is a very vocal, conversational country. A lot of people in rural parts of the country, for example, use WhatsApp almost exclusively with voice memos and voice to speech. And many people are actually building vocal GPTs for Indians who prefer to speak rather than type. For example, Kisan AI, which used to be called Kisan GPT, is a GPT for farmers that'll answer their questions about crops vocally on their phone speaker in their local language. All right, next up, Antler has announced a fund specifically dedicated towards Indian startups that are building for ONDC. And I think that this is the first time that any VC firm has been betting on ONDC in such a big way, unless you count Google's accelerator for ONDC startups, which was giving out grants to startups building for ONDC. So Antler is going to be giving out pre-seed capital of $300,000, and they could increase that by an additional $200,000 later on for key partners. And also the cherry on top with this news is that Antler is open to helping pre-team, pre-idea founders who just want to build for ONDC but aren't quite sure how. Antler is going to assist those people in making it happen, which is really cool. Anyways, talking about investment into other exciting spaces, KRAFTON, the folks behind Battlegrounds Mobile India, originally PUBG in India, are investing $150 million into gaming studios and startups in India over the next 2 to 3 years. In the past, KRAFTON has invested $140 million into Indian startups, so it's really cool to see them continuing down that path. But now let's talk about another facet of the gaming space. The government of India would call it gaming. I call it gambling or fantasy sports or whatever. You know, it's not really gaming. Real money gaming is what they call it. But we're starting to see the fallout of this 28% GST, and the first victim here is MPL. They've laid off 350 employees, and according to the CEO, Sai Srinivas, they're doing this to cut costs. Now, MPL was last valued at $2.3 billion when they raised their Series E back in 2021, but I'm guessing now after this 28% GST and the devaluation of really this entire industry, or this facet of the gaming industry here in India, the gambling fantasy sports industry, I really think that their real world valuation has probably dropped below $1 billion, and they would be considered an ex-unicorn if they went out and raised funds today and were valued by a VC firm. Now, MPL is not the only company right now in hot water because of this GST levy, because there's another company that just can't seem to catch a break over the last couple of years. Hike has had a really difficult journey. So this is their third crisis over the years. The first one, of course, was when they shut down their messaging app, which was supposed to be a competitor to WhatsApp. WhatsApp is now number 1, Telegram is number 2, and Hike had to go and do something else because they couldn't win that battle. So they pivoted to building a blockchain-based real money gaming platform called Rush Gaming Universe. But then during the Union Budget 2022, a 30% TDS was applied on profits made for crypto trading. And because the Rush Gaming Universe is a Web3 platform and they were using Rush tokens and selling NFTs, this had a major impact on them. And so now with this 28% GST applied to real money gaming, which is another category that unfortunately they are in, it's really uncertain what the future of this company looks like. Hike's founder and CEO, Kevin Mittal, spoke to INC42, and he said that about 55 people have been laid off because of this. That's about 22% of the company's workforce. All right, next up, I've left this kind of closer to the end because I know we've been talking about BYJU'S and what's been going on at that company, probably a little bit too much in our news videos, but I do want to share an update with you guys. I'm fascinated by this story and as it's unfolding, so I apologize if you guys aren't finding it as interesting as I am, but the Chaudhary family, who are the founders of Aakash, they don't seem to be too happy with how things are going with BYJU'S. They've decided that they're not going to be handing over the remaining 18% of Aakash that they're still holding on to, and Blackstone, which also owns stake in Aakash, 12%, they've also opted not to hand this over to BYJU'S, and both of these companies had originally agreed to make that happen, so this is pretty surprising. So the original plan for both of these parties was that this was going to be a share swap for Blackstone and for the Chaudhary family, where they would swap stake in Aakash for stake in BYJU'S. Now, I should note here that this is technically non-negotiable. The Chaudharys are legally obligated to do this stake swap, at least according to BYJU'S, and so BYJU'S has actually sent them a legal notice due to their unwillingness to do this share swap. However, just like the lenders who wanted to accelerate the repayment of BYJU'S $1.2 billion term loan B, it looks like the Chaudhary family and Blackstone are citing a breach of the terms of the agreement that would have forced them to do this share swap, and they're saying, because you've breached the terms, which was not releasing their FY22 financials, they are actually not obligated to do this share swap anymore. All right, next up, let's talk about the funding news this week. And I don't want to say this prematurely because it's probably not true, but it feels like we might be out of the funding winter. Take a look. So this was actually the best week so far for Indian startup funding this quarter. We hit $142 million raised across 12 companies. And as always, all this stuff is going to be down in the description down below if you want to follow up and take a closer look at it, as well as the chart that I showed you earlier. So let's go through some of these deals. Leading the charge, we had two companies, both raising $50 million in their Series B, Credgenics and Insurance Deco. The former is in the debt collection space, and the latter is an insurtech company. Then we've also got The Ken, an amazing business and startup journalism website. They publish some amazing stuff, so definitely go check them out. They raised $2 million in their Series B. And then we have MetaShot, a very cool gaming company, a real gaming company, not a gambling company, and they're building metaphysical experiences involving physical cricket bats that are Bluetooth enabled. It's really cool. You should definitely go check them out. They raised $400,000 in their pre-seed round. All right, that is all the startup news that I have for you guys this week, and I'll see you in the next one.